$32 billion in customer funds vanished. The biggest crypto fraud in history. And it happened right under everyone's noses. I'm Victoria Sterling, and today we're investigating how Sam Bankman-Fried built a $32 billion crypto empire, fooled celebrities, regulators, and investors, then stole it all. FTX, the second largest crypto exchange in the world, valued at $32 billion, backed by celebrities, endorsed by regulators. Total fraud. And the craziest part? They used customer funds to gamble on crypto markets, lost billions, and tried to cover it up. Let's investigate. Crypto boom era, 2017 to 2021. Bitcoin went from $1,000 to $60,000. Everyone wanted in. Investors, institutions, celebrities. Gold rush mentality. Sam Bankman-Fried, SBF, MIT graduate, quant trading genius, created crypto trading firm Alameda Research, then launched FTX exchange in 2019. FTX platform, advanced trading features, low fees, professional interface, quickly became second largest crypto exchange. Sounded legitimate. Effective altruism. That's what SBF called his philosophy. Make money to give away. Sounds noble. But was it? Or just another cover story? Celebrity endorsements everywhere. Tom Brady, Larry David, Steph Curry, Gisele Bündchen, all promoted FTX, gave it credibility, made it seem safe. Top venture capitalists invested. Sequoia, Andreessen Horowitz, SoftBank, $2 billion in funding. Smart money backed FTX, made it seem bulletproof. Regulators seemed to approve FTX. Complied with regulations. Operated in jurisdictions with oversight. SBF testified before Congress. Everything looked legitimate. $32 billion in customer funds. Retail investors, institutional accounts, pension funds. Everyone trusted FTX, deposited crypto, thought it was safe. But here's the problem. Alameda Research, SBF's trading firm, had special privileges on FTX, could borrow customer funds without limits, hidden from everyone. Analysts warned about FTX, questioned Alameda connection, asked about customer fund safety. SBF dismissed concerns, called them FUD, fear, uncertainty, doubt. So what was FTX? Legitimate crypto exchange on the surface. But underneath, SBF's personal piggy bank, Alameda's unlimited credit line, customer funds for gambling. 2022, FTX valued at $32 billion, SBF worth $26 billion. Second youngest billionaire, crypto golden boy. Everything looked perfect. First cracks appeared. CoinDesk article revealed Alameda's balance sheet. FTT token backing. Concentrated risk. The foundation was cracking. So what was FTX? Crypto boom success story meets celebrity endorsements meets VC backing. Perfect legitimate facade. Hiding massive fraud underneath. The fraud started with customer funds. Alameda could borrow from FTX without limits. No collateral, no oversight. SBF approved it himself. Alameda used customer funds to gamble. High-risk crypto bets, venture capital investments, political donations, even luxury real estate, not their money. FTT token manipulation. Alameda held massive FTT position, used it as collateral, artificially propped up price, fake backing for fake loans. Collateral. They used their own token as collateral to borrow customer funds, to buy their own token. Circular fraud. Ponzi scheme vibes. Hidden code in FTX system. Allow negative balances for Alameda. Bypass liquidation. Special API access. Built-in advantage. Technical fraud. Fake balance sheets. Alameda's assets overstated. Liabilities understated. Risk hidden. Presented to investors. Lied about everything. Political donations with customer funds. Millions to both parties. SBF became second largest Democratic donor. Bought access. Bought protection. Luxury Bahamas penthouse. $30 million. Private jets. Celebrity parties. SBF lived like royalty on customer funds, while customers couldn't withdraw. Media charm offensive. SBF gave interviews everywhere, promised regulation, called himself responsible, built image of ethical crypto leader. Total lie. Regulatory capture. SBF met with regulators, shaped crypto legislation, donated to political campaigns, bought influence. Regulators didn't investigate. $32 billion in customer funds misappropriated. Biggest crypto fraud in history. Bigger than Mt. Gox. More sophisticated than Madoff. New age financial crime. House of cards built on customer funds. Fake collateral. Hidden code. Regulatory capture. One card falls. Whole empire collapses. That's what happened in November 2022. So how did they create the fraud? Customer fund theft, FTT token manipulation, hidden code, political donations, regulatory capture, perfect storm of crypto crime, retail investors, regular people, life savings in crypto, trusted FTX, couldn't withdraw when collapse came, lost everything, institutional investors, hedge funds, pension funds, professional money managers, trusted FTX's legitimacy, lost billions, should have known better, venture capitalists lost billions, Sequoia, Andreessen Horowitz, SoftBank, smart money, not so smart, did zero due diligence on Alameda connection, celebrities who endorsed FTX, Tom Brady, Larry David, Steph Curry, Gisele Bündchen, used their credibility, promoted fraud, class action lawsuits coming. These aren't just numbers, these are people, real people, who trusted a platform, trusted celebrities, lost everything. Some lost their life savings. Bahamas community devastated. FTX was major employer. SBF was local hero. Sponsored events. Donated to charities. Then collapsed. Local economy hurt. Crypto community betrayed. FTX was supposed to be the good exchange. Regulated, professional, trustworthy. Instead, biggest fraud. Trust destroyed. Regulators failed to protect. SEC didn't investigate Alameda connection. CFTC didn't audit customer funds. Political donations bought influence. System failure. Media failed to question. SBF got fawning coverage. Crypto golden boy. Effective altruist. Nobody asked tough questions. Nobody investigated Alameda. Millions of victims worldwide. Retail investors. Institutions. VCs. Celebrities. Bahamas community. Crypto community. Everyone scammed by SBF's fraud. So who got scammed by FTX? Retail investors, institutions, VCs, celebrities, Bahamas community, the entire crypto ecosystem. Now how did it all collapse? Who got scammed by FTX? Retail investors lost life savings, institutions lost billions, VCs lost face, celebrities got sued. Everyone except SBF. November 2nd, 2022. CoinDesk article exposed Alameda's balance sheet. FTT token backing, concentrated risk. The truth started coming out. Bank runs started. Customers tried to withdraw. Billions in requests. FTX couldn't pay. Only had fraction of customer funds. The end was coming. Binance offered to acquire FTX. Rescue deal. Hope appeared. But Binance walked away after reviewing books. The fraud was too big. November 11th, 2022. FTX filed for bankruptcy. $32 billion gone. SBF resigned. Crypto world shocked. The biggest fraud in history revealed. December 12, 2022. SBF arrested in Bahamas. Extradited to United States. Criminal charges, wire fraud, securities fraud, money laundering. Justice coming. Full scope emerged. $32 billion in customer funds misappropriated. Biggest crypto fraud in history. SBF's effective altruism was effective fraud. November 2023. SBF trial. Found guilty on all 7 counts. Wire fraud, securities fraud, money laundering. Facing 100+ years in prison. Justice served. Caroline Ellison, Alameda CEO, pled guilty. Testified against SBF. Other executives pled guilty too. They turned on him. Justice for everyone involved. Lessons from FTX collapse. Crypto needs regulation. Customer funds must be protected. Celebrity endorsements aren't due diligence. Effective altruism can be effective fraud. $32 billion in customer funds misappropriated. Millions of victims worldwide. Justice finally served. I'm Victoria Sterling. Subscribe for more financial mysteries.